get straight to the floor show. We've got traders at the New York Stock Exchange as well as the CME Group. Stephen Guilfoyle at the New York Stock Exchange. Let me begin with you here. We're getting somewhat of conflicting signals between what the Fed is watching, what the market is watching. How concerned do you think the Fed really is about the slowing U.S. economy?
I think it becomes, actually I'm going to agree with Powell here, which will probably shock a lot of folks. Growth has long been my largest concern. I think it's, look at debt to GDP. What is it, 106%? In Asia, it's even worse. It's like 250. So we're not going to get any help from abroad. The entire world is starting to slow down. Now, they probably pushed us a little further down the path than we should be with the $375 billion that they've already pulled out of the economy through the quantitative tightening program. That means that your 2.5% Fed funds rate, folks, is really 3.125. And guess what? You don't feel that till September because that's 9 months behind. So we still have some slowdown to go here. I think they're finally wising up a little bit. Not that I embrace any kind of debt-fueled expansion, which is where we have to go, but we do have to liquefy this economy as we head into this danger. This is a troubled road we must travel.
And Powell intimated many times the Fed will be flexible, the Fed will be patient, but we could still see 2 interest rate increases this year. My question for you, Scott, is we just heard the quantitative tightening that Stephen Guilfoyle spoke about, but do you think the Fed would hike interest rates with what we have going on right now, economically speaking, and continue to tighten? Because if you look into the semantics of all of this, Powell did say the size of the Fed's balance sheet should be, quote, substantially smaller. Well, how much smaller?
Yeah. Well, the chances obviously have been reduced significantly over the last couple weeks. In fact, here at the CME, I think they're pricing in, any possible rate increase for 2019 as low as about 15 or 20%. That being said, the one point that concerns me the most is when we got that ISM manufacturing number a week ago last Thursday, it was really weak. And what that shows to me is that the trouble that we see in the Eurozone, the trouble that we see in Asia, maybe is starting to seep here in the U.S. Maybe that's the numbers that we saw coming out of these big retailers this morning. That might be, just the foreshadowing of what is to come here. So I think there's very little chance, at least in the near future, of a Fed rate hike. But I would absolutely be concerned about the slowing growth seeping back here into the States. And earnings coming up in the next couple weeks, we're going to see that coming out of the big corporations and what they have to say about that.
And there's a small problem here, Phil, and the government is partially shut down, which means we're not going to get the latest trade deficit numbers. We're not going to get retail sales, GDP. That could put blindfolds on a lot of investors.
It really can, and it can put blindfolds on the Federal Reserve. And I think they are a little bit concerned about trying to make decisions about the global economy, especially at a very critical time without that data. So it's going to be a little bit more difficult. We'll just go back to the way we used to do it, with blackboards and tea leaves and try to figure it out that way by the market mood. But, the one thing I will say, we did see, to Scott's point, a big drop in the ISM last month. But you got to remember, we were coming from a very high level. And I see a lot of people trying to read too much into that drop, that 1 month big drop. I think a lot of that had to do with the end of the year positioning, a lot of companies pulling back ahead of the new sanctions, not knowing what's going to happen. But we don't see it as a continuing drop. And we're looking for the manufacturing sector to bounce back. So I know with this data, it's been so dramatic and so volatile, but I'm afraid it's scaring people too much. Take a pause and be easy with it.
Phil Flynn, Scott Bauer, Stephen Guilfoyle, thank you very much, gentlemen.
Thank you.
Well,